Good morning, everybody. Monday, February 5th, going into a decent week of all the big names of items and products that everybody uses. McDonald's, Caterpillar, PepsiCo, a lot of big names this week. To kick off the week, really quick, being that we closed at 49.58, we have 4 green weeks in a row. You could start your week off with this: the February 9th SPX credit spread, buying the 49.65 calls, selling the 49.60 calls, currently getting better than $2. Obviously, looking for a little bit of a dip during the course of the week, possibility to scalp it off, high probability as you start incrementing these green weeks consecutively over and over again that you could see full credit on this. So that's there to start the week out. Unfortunately, because of where we're at, overnight here on the S&P futures, this is a 1 minute chart looking at the Friday lows right there at 9 o'clock into the highs on Friday afternoon. 50-point run. Better than 50 points, almost 75-point run. The Powell reaction overnight, no, that wasn't it. Here was the Powell reaction overnight. Very muted because you had that nice little dip there, right there at the end of the day. But you haven't taken out that first warning sign, that first warning that we were talking about being that dip that we had midday there on Friday. So we've just been floating along here overnight. Very, very little of anything to be any way aggressive in the near term 0 DTE, 1 DTE. Come over onto the dollar. Dollar, nice big spike on Friday off that jobs report, followed through up until we got into this earlier and floating. We have been actually, I don't think I have my, yep, extended hours. My bad. We broke up above overnight and we're hanging above this 104. Why is the 104 important? Well, zoom you out a little bit. You can see here where this 104 is, and it's obviously a problem. We had a problem over here back in the middle of December. We're right back up to it, and obviously seeing this breakdown that we got into the end of December. Pivotal moment here over here on the dollar. So something to be aware of, pay attention to. You got 104,636 up above. On the VIX, the standard over the weekend gap up has taken place. VIX loves filling those gaps, so falling VIX at minus 1387 early part of the week, something very good for anybody who is not going to be playing puts and instead looking for that 3, 4, 5 points to the upside. NASDAQ, same thing. NASDAQ Powell reaction overnight, a little bit of a dip, right down to where our dip was midday there on Friday, and nothing off of it, no damage taking place. I will have you notice that the 5-day and the 10-day are inverted, not bullish like what you see over on the ES, where the 5-day is above the 10-day. Now, when we do get extended up here, your 5-day moving average is always your support level. So your best case scenario from where we currently are is a possible 30 points to the downside. Leaving you with that, we go in today with McDonald's and Caterpillar. And I'll start off with Caterpillar here on a wider view, looking at the October lows of last year. Big bullish run, just been on a constant bullish run. Haven't taken Caterpillar trades very often. Stays right on my bottom left of my right-hand screen, right next to McDonald's, coincidentally. And here we have earnings reporting today. And I really can't give you anything on this from a structure point of view in any way, shape, or form. I mean, here is the wider view on Caterpillar coming off the 2000 lows. Okay. It's just been on a constant, steady bounce. Typical Dow. Rally up, new high, rally back down almost to the lows. Rally up, new high, rally back down almost to the lows. Since this run that started over here back on COVID, it's just been going. I, again, from a structure point of view, can't give you anything on this. I just don't have the attention span on Caterpillar, other than watching it intraday, watching it weekly, and being able to scalp it here and there when it sets up. I do have a number of big Fibonacci's up here in the 320 area, 325, 320. So very possible, but looking at it from a technical point of view, here's the monthly, and it's very clear how the monthly peaked in February 2021. So you're still posting higher highs, but your monthly is far from bullish. Not that it's pointing downward, but it is not bullish. Look at it from a quarterly point of view. Bullish, nothing to be extremely bearish about, but at the same time, nothing absolutely fantastic. Look at it from a weekly point of view. Weekly, again, a little bit of a divergence there, but still positive, pushing to the upside. Nothing of any notice there. Come on to the daily. And the daily, you can see here, very clear sell divergence. That dip, that fractional little dip that took you down to 275, middle of the year, right, or middle of January. Oversold. Get oversold on your daily, you're bouncing. Period. The end. That's what you got. So on Caterpillar, don't really have anything in advance. We'll see what we get off of earnings. And if we get a push up into that 325, 330 area, perhaps there may be a trade to be taken going out into the April or May, but we'll see what we get. On to McDonald's. You see this 299 multi-top. I mean, we came up here back in April. We were up here again in July, and then we fell off into October. And now, off of October, we have had this run right back up to 299. And again, you guys have seen 1, 2, 3 different trades, 3 different weeks. In the 5 weeks that we've had this year, we've traded McDonald's. We've gotten 100% or better, 200% or better. Well, we're here. We're right up at this 299. And again, what can we see? What can we tell coming off of this from a wider view? Wrong way. McDonald's, again, not from a structure point of view, but more from a technical point of view. Just an absolutely disgusting negative sell divergence on the 4 hour. 4 hours to 4 hour. So we come on to the daily. The daily, absolutely disgusting sell divergence over on the daily. Price, not having any reaction to it. Come over onto the weekly. Weekly, onto a sell on the weekly. Not having any reaction to it. So what we get coming off of earnings, again, we will have the ability to take the trade after the earnings have been reported this morning, and we will see what is there to be taken, because what we have been doing over the course of the last 38 days, every time we're getting close to that 299, we're taking 295 or 290 puts, and we're getting the ride. Get up here, break above 295. We got up there to 300 for a little bit of a day, a little bit of a dip, a little bit of a bounce, and then the crash back down minus 290. And here we are, right back at 299. So we'll see where the report comes out. But all I can say is, for you guys that do go to McDonald's, you guys pay way, way, way too much for the exact same food that I get. Show you there in the email. See the picture of it, the image. Catch you guys in the chat room.